Here's the deal. We've been in a goods recession in the United States of America for about a year now, okay? Goods recession meaning like physical products, right? It could be like anything, whether you're talking about shoes or whether you're talking about, I don't know, dining tables, okay? We've been in a goods recession for about a year now. Now, a company like Union Pacific, guess what they're doing? They're moving around all these sorts of goods, right? They're going to get a certain amount of their business from moving energy-related products around, right? And that's what all the railroad operators, they all have certain segment of their business that is either moving, some sort of energy-related, something around that. So that's a really stable business. But goods. So if you want to know how the goods sector is looking, and if you want to know if we're going to likely get out of that recession, then go ahead and take a look at Union Pacific's numbers, dive into those. The whole report's going to be there. Listen to their outlook, listen to their commentary. They're going to tell you if this goods recession's ending anytime soon or if we're going to continue on here, okay? The trucking companies have been in a really bad spot recently. So there's a thought process that the goods recession is ending and we're going to strengthen in the back half of this year out of the goods recession and things are going to get healthier. We'll see, okay? But pay attention to that one. That's Wednesday before the bell. Logitech's one of the most fascinating 5-year charts you will ever see in your life, right? It's so crazy because this was a stock that fell all the way down to like $30 during the Rona crash, right? And then all of a sudden everybody was like, wait a minute, if everybody's forced to be home, wait, I think maybe like computer sales might be strong and like all the accessories that go along with that. Oh, everybody's forced to work from home, have school at home. Wait, this is going to be great. And the stock went on one of the most insane bull runs you've ever seen, from like $30 to $130, $140 a share in a matter of about a year and a half. Absolutely insane, right? And then it fell right off a cliff right after that because then all of a sudden the world started to open back up and it hurt a company like Logitech in a significant way. And so literally that's one of the most insane 5-year charts you will ever see. Those sorts of gains and then to give it all back essentially. Now recently Logitech's kind of balanced out here, right? And I'm interested to kind of see what happens with their earnings because it'll be a tell on what's going on with Corsair Gaming as well, which is a stock I personally own. I don't own nearly as many shares I once owned in Corsair. There's just some better opportunities I see in the market, so I still like a Corsair. It's just, PayPal's definitely stolen some of that money away in a few other stocks recently, okay? Now, when it comes to Microsoft, what do I think is going to happen with their earnings, okay? And by the way, the stock's done tremendous past 5 years, 224%. So in regards to Microsoft, their earnings are going to be just fine. They're going to be just fine when it comes to their earnings. Now, there's a potential for weakness in the stock price because, let's be honest, I think everybody knows their earnings are going to be just fine. So that's not going to come as a surprise. But it seems like the AI excitement hype is taking a little breather. And that's not going to be good for Microsoft because that's a stock that is capitalized huge on the AI excitement and hype. So if anything, I could be looking for slight upside in the stock or slight downside in the stock. I don't think it's necessarily a stock that's going to crash 20% or something on earnings. I think that would be very surprising. But I also don't think this one has a huge upside ahead for this next, I would say, 6 to 12 months or so. So that's my opinion on Mr. Softy. What's my plan with Meta stock if the stock goes down significantly after these earnings? Let's say if the stock does nothing after earnings, or if the stock goes up substantially after earnings, okay? Which, if you ask me, do I think the stock price is likely going to go down on earnings, stay about flat on earnings, or go up on earnings? I would say there's a much higher probability that Meta stock goes up significantly after earnings. And when I say significantly, I'm talking anywhere from a 10 to 20% type move. It's very possible it doesn't happen. And for me, it doesn't really matter financially. Like if the stock goes up a ton, down a ton, stays about break even, it really makes no difference. And the reason being is if this stock goes down, if anything, I could actually be a buyer of Meta, even though obviously the stock is substantially, obviously, above my cost basis. But at the end of the day, like Meta at 300 is still a deal. It's just like the thing that's been keeping me away from buying more Meta is not the valuation or the stock price or anything like that. It's already a huge position for me, right? $535,000. So, but at the end of the day, like if this stock was to go down, it's such a buy the dip. I mean, even if it goes to 330 or 360 after earnings, it's still a buy. Like you look at the valuation, you look at the future growth, it's still a steal deal for Meta. And that's a tough situation here, in regards to like me looking at it and being like, not buying it when it's still a steal deal just from the mere fact I'm like, I need to build out other positions. And there's a lot of other opportunities in the market outside of just Meta that, can 2x, 3x, 4x, 5x your money over the coming years as well, right? Now, amazing's on. Amazon could also be moving over this next 48 hours on the back of Google's numbers and Meta's numbers. And the reason being is Amazon has now built out a very substantial advertising business, okay? Very substantial. It used to be seen as just e-commerce and AWS. Now it's seen as AWS, e-commerce, and advertising, okay? And so this could actually shake up Amazon's stock price quite significantly. And let's be honest, if advertisers are feeling more comfortable starting to spend more money, right, then they're feeling a little better about the consumer and a little bit better about the economy. If there's a belief that the consumer's in a little better place, if companies are a little more incentivized to advertise, then what that likely means is Amazon's e-commerce business is going to start to build more and more, right? And we could start to see AWS growth accelerate at the end of this year as well, which that stock price moves significantly based upon AWS. So we could actually see Amazon stock price move. Now, my hope is stock price doesn't move too much because I'm still in buyer mode for Amazon all the way until the end of this year. And so my hope is Amazon stock price goes down in the short term. I'm just not so confident of that, especially with the reduction in employee counts they've done recently and where I think their EPS and net income's going in the back half of this year and even into the first several quarters of 2024. Okay, so we'll see, how all that shakes out there. Okay, now PayPal. So PayPal could move based upon Visa numbers a little bit, right? These ones kind of get put in the same category a little bit. They might compete on a business here or there, but overall, PayPal is a pretty different company, like somebody like a Visa. So my hope is actually Visa pulls down after these earnings and, it pulls down PayPal. But it does seem like PayPal gets grouped more into like the fintech space than kind of with like companies like Visa and Amex and Discover and things like that. So it's a potential it could move around a little bit, but we'll see. Now, I actually just heard while I was preparing this video that Twitter, we can call it X or whatever it's called nowadays, right? I did hear that they are cutting ad prices significantly, right? Now, let's be very clear about what's going on with Twitter. That is no representation of obviously what's going on with Google, Meta, or anybody else. Twitter's going through a lot of problems on the advertising side. They've seen massive drops in terms of people advertising on the platform, and essentially now they're in a situation where they're cutting ad prices massively. So they're just in a really tough spot on kind of the cash flow side, and I think Elon's trying to pull some rabbits out of the hat, to try to get some advertising momentum there. They're just in a really, really bad spot, right? At the end of the day, that's just a very tough business, kind of what they're up to, a very tough business, okay?